Hey, Goose. What's up? Al, morning. Morning growl, yeah. Got my pineapple. I guess you call it pineapple. It's gold pineapple monster here. And quite a tasty beverage right there. It reminds me of kind of a little bit of beer, a little bit of drinking a beer in the morning. But it's got a kick to it, it's not one of the alcoholic ones. So anyway, morning, Jason. Don't catch the FOMO fever. That's what I gotta say. Stay like even Goose right there in the chat. He's definitely trying to, feeling some FOMO, even though the market's not been moving. We came up to the resistance and we just been parked there. Are we going to break out or are we going to break down? That's the big question. Let's talk about what we got. Now, the big thing to note, this week is kind of void of financial catalysts, economic news. It's kind of void this week, jobs this Friday. But next week, CPI, PPI, FOMC, rate change announcement. Huge OPEX for both the weeklies, the monthlies, the quarterlies, the first half of 2023. You believe that's already over almost. And the futures also expire all next week. Crazy OPEX, likely to cause some volatility. Historically, the last, say, 18 months or so, OPEX week has been kind of bearish. We've seen sizable pullbacks in that OPEX week. And last month was included in that. We saw that pullback last month. So, yeah, the VIX is nearing, well, we can look at it, but, nearing lows that we haven't seen in a long freaking time. SVXY, that's Sierra, Victor, X-Ray, Yankee, SVXY. Crazy pop yesterday and the day before. I was talking about that on 30 Minutes of Awesome last night. How the opportunity is there. Usually it doesn't go but about 60 days without getting a 15 to 20% pullback on SVXY. Yesterday we were at 59 days. So SVXY is my current favorite ticker for volatility. Although I do hold 2 long VIX contracts right now at 16 for July. I am holding those and I may add more to that. So can't go wrong buying VIX contracts directly. They don't decay. I mean, they do decay with theta, but they don't have weird holding decay. Like UVXY right now is at $2. It's virtually impossible to play because 100% move takes you to $4. I mean, and you're not going to exponentially increase your money there. So it is leveraged 3x against the VIX. So if the VIX moves the VIX moved 30%, right? UVXY should move 90%. That takes you up to $3, $3.90 or something like that. Ridiculous. Maybe up to $5. I don't know. Anyway. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. Just because I made $1 million or $500,000 trading VIX before doesn't mean I'll ever do it again. This presentation here is intended to be informational, educational, and fun. It is not a recommendation to buy or sell any financial instrument. If you desire personal financial advice, hire and consult a financial advisor. Has a fiduciary duty to take care of you. Morning, Michael. Morning, Jason. Morning, Jen. Morning, Alan. Morning, Francois. If you're new here or maybe you don't see how to chat with me during the live stream, all you got to do is hit the subscribe button right down. I guess it's that way over there. And keep flipping myself back and forth. Anyway, over there. And if you do that a few seconds later, while I'm live, the chat opens up and you can chat and ask me questions. If you're watching this later, you're going to have to leave a comment down below. And if you want to chat with us live in Discord all day, the link is in the description. It's like $5 for 3 months, and then you can add another year for like $20. pretty affordable. You get an indicator and a watch list and all in that part of that deal. So pretty good deal. Anyway, let's get on with it, shall we? As I said, the economic news calendar here, pretty devoid of anything happening the rest of the week. And we do, there are little things popping up, for Canada. And you got U.S. crude oil, consumer credit, let's see, moving on down. We got unemployment claims tomorrow. I don't really see it as a big mover. Natural gas storage, final wholesale inventories. And Friday, just not much. So really not a whole lot on the calendar this week for the rest of the week. But next week, dun, 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 we've got CPI coming up right there. That's going to be a market mover. That could be the reason we pull back. Like the mainstream media, bing, 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 coming out in force saying, oh, CPI was hotter or colder and, investors didn't like it and we pulled back. Well, guess what? The chart is saying we're probably going to pull back already. And I don't even know what these numbers are going to be. So, and then PPI coming out on Wednesday, along with the FOMC statement. Jerome Powell speaking at 2:30. We get the Fed funds rate right there. And then core retail sales on Thursday. Empire State Manufacturing, retail sales, unemployment. This is all, I didn't even mention that one. Core retail sales. This is all going to be market moving stuff right here. All week long, all the way into Friday with consumer sentiment. We have a stacked week next week. So this might be a good opportunity. You got till about Monday to jump in on some VIX type play. Coming up next week, we're likely to see some volatility. There is no way that one of these numbers doesn't create some sort of drop. Let's play the odds here. There is likely to be some sort of volatility tomorrow with that many red events coming up, economic news numbers coming out next week. I cannot fathom that everything's going to be rosy and great, and we just continue to sit here and churn off to the lowest VIX we've seen in, as Goose says, 5 years. All right? This is your warning. Prepare for some kind of market volatility. Now, this is probably realized volatility. I don't know if it'll create implied volatility, but if it doesn't, I'll be quite shocked, and you guys can call me out right in the chat, and, the following week, as we move into, the 19th or 23rd. So next week, likely to cause some sort of crazy volatility. It's going to be realized volatility. It may mean a big pop. It may mean a big drop. It may mean both. It may mean all the above. And this economic news doesn't even count the OPEX that we're likely that's going to happen on Friday either. Thursday, Friday. Huge OPEX. We're talking, it's probably going to be like a record-setting, $1.8, $1.9 trillion OPEX. I'm willing to bet. So, any questions? Let me know in the chat. And as I said at the start, if you just want to chat, all you got to do is be a subscriber. So, all right, moving on. So this week, kind of boring. That's what we got. But it's the calm before the storm. I really kind of feel that. So love spiking on earnings, but then kind of chilling out a little bit. So I'm not sure. There we go. Love sack. Yeah, get a nice little pop. Nice move down, and that could be all she needed to break out. Looks like we're testing the roadmap line pre-market. Might get a little pop. I was actually thinking about maybe going to the showroom and checking these out. Our 20-year-old rooms to go couches are about to give it up. So this looks like a interesting solution to the problem we have in our living room. Alrighty. Oop, not big cap plays. I want morning monsters. Talking about the S&P 500. We're right up there. We're almost and we can get one of these lightning moves right here. Would take us right back down to about 41.80. And we're likely to go test that prior high. I've got a alert up there on a breakout higher just in case. We're just consolidating right below the high. We'll probably spike up, hit it, and then get a retrace of some sort. So I don't think VIX is an emergency. I would definitely wait. I wouldn't preload it before the market opens. This thing can push lower. Let's just go ahead and look at it. We don't usually look at VIX during the morning monster, but let's look at it since we're talking about what we need to be prepared for. And so we had lows right back here in summer of 21. We zoom on out. Yeah, that's not 5-year lows. Goose, that's 3-year lows. We were down here back in 2020. Look right here. We go come across. We go right there. February 2020, right before COVID, and we had the big spike. We haven't been on a VIX level like this since 2020. And right there, 2019, November, down to 1150. So 1150, usually the resting. This has been like the lows we've seen for years right over here. So this is how low does she go? That's basically the bottom. That little orange zone. We're down there. We haven't been this low in a long time. Volatility is artificially suppressed. I have $16 calls out to July. I just opened up my platform, typed in VIX. It might be VIX-M. It might be $VIX.X. It might since this is an index, you can't actually buy VIX, but you can buy options on VIX. So one thing to note, I went with the monthly, which is the third expiration in July. So if we zoom out on our calendar here, that would be the 21st. So VIX 21-23 contracts for $16 is what I bought. I don't see how we can get through the rest of June without at least coming back up in the 20s. It just doesn't seem likely that we just sit down here. I mean, look at the history of VIX. Is there any period where it just sat like a dead thing for months and months on end? Not really. We always get some, there's a lot of noise in this chart. We kind of, a period of low noise and then spiked. There's almost always some spikes in here. And we're not anything like we were back here in 2017. That's not the environment we have right now. There's a lot of unknowns, a lot of stuff going around right now. So I think this may be artificially suppressed on the downside, and we could definitely see a spike. And as I said, I'm holding two. I talked TT. You gotta go watch the morning or the 30 minutes of awesome yesterday. UVXY. Look at the price on it. How do you make if that's a 3 times leverage, right? 3 times leverage. So if VIX moves up 30%, this would move 90%. How do you make any money on something moving that small amount? I mean, you could load up on it, sure, but 90% gain on that. We're only going up to like $4, $5 right there. Yeah, even 100% gain to $4.59. I mean, that's not a. You're not gonna buy options on that and make $1 million. Like, that's just not the kind of. You're gonna have to put a lot of money in to make a lot of money. That's it's not the kind of opportunity I want. I want something that's more likely to make a high return. So this is the one I'm looking at right now. Maybe adding something to it because we could see, like I was kind of alluding to at the beginning there. The longest this has gone since COVID is about 60 days. 63 days, I think, was the longest period I found in here where we didn't get a 15 to 20% pullback. this might be the way to play it. And look at, look at the size dollar move, a 15% move off of that high yesterday. It's down to 67-ish. So we're going from 78 to 67. Now you can make a few bucks off of that without putting a ton of money into options. All right, that's the kind of numbers I'm talking about. And then if this dropped even further down to like a 20% retrace or even bigger, you're looking at like 62, 63 area. Look, just happens to be back to the roadmap line. I mean, it's one of those opportunities right here. Now, this one, see, that one looked like it went a little longer than 63 days, possibly. 75 days, 78 days before really starting to pull back. So just be cautious, all right? This is 59 days up into here. We could go a few more days, but I think next week is highly likely to result in some kind of volatility event. So just be prepared. I'm not saying this is going to work. I'm certainly not saying to go do it. And, this is not trading advice. It's not a recommendation to buy or sell anything. Just giving you some ideas. Puts on this baby, maybe down at 70, 71. And that could pay out pretty good. All right. You would definitely want to buy a little time, maybe July. I mean, you could go short term. You could be like, I just want to cover the event risk of next week. You could go out to the end of the month. And we look at the event risk. That gives you 2 expirations. You could potentially play. You could, if you want to cover next week completely, go out to the 23rd or possibly the 30th on the weeklies for SVXY and buy your puts. If you wanted an extra week, there's your idea. Now, if you want to give yourself more time, go out to the July monthly expiration. That'll be July 21st, 2023. As I said, I did buy 2 VIX calls. Bought calls at 16. That was on Friday. Yeah, Friday. And they're underwater. I may add a few more to them. If this thing pops, it's likely to come right back up to the roadmap line at the minimum at 20 and maybe up into the $25 area would be kind of my expectation. Now this one also does not follow my price patterns, since this thing historically has a resting rate at 20. And the all-time resting price is 20. So this is $6 under the all-time resting price. Like if you take the historical average of VIX, 20 is kind of like where it sits. All right, you see, every time we got to 20 last year, we spiked. This year, we're down below it. Be careful. So as of late, what jumps out to me is the big movements on the daily basis on VIX too. We're seeing some outsized moves on VIX. So people are selling this thing like crazy, suppressing it. It's kind of like a put hatred, because this is based on the put call ratio of the front month on S&P 500. And it's showing nobody's really betting for any kind of downside right now. That's showing a lack of protection in the market. And that's the perfect time to rip lower, rip a lot of people. Then you get panic buying of puts. I mean, another way to play could be puts on SPY, puts on SPX, out a little bit of time to cover the event risk. Goose and I and a few other people have been talking about debit spreads on SPX or ES. Kind of go down to about 250, then buy 4250, and then buy like a 4150, running about 14 points roughly right now. And so you risk 14, 15 points to potentially make 85, 86 points if it crushed down to 4150. And that kind of limits, that does cap off your gain. But that's the kind of risk I like. Think about that. Risking about 15 to potentially make 85. I mean, it's like a 6-to-1 potential payout. So I don't usually talk about stuff like this because the risk of pullback isn't usually as high as it is right now. So definitely be careful. The market's just opening. S5FI continuing to hang out in the middle. I do think we're probably likely to do for a pop up to the top of this range at some point here. It's been since February since we've been up there. February. Last time we were up there, went all the way to the bottom. We have not come back up to the top after poking out the bottom. Just been kind of churning in the middle here. The highest we got was 60, and then we just kind of been churning. We did make another dip here into the 20s, and that hasn't resulted in a pop to the top yet. And this thing is kind of like a giant oscillator. If you've never looked at it before, we tend to oscillate in this zone. It's just S&P 500 stocks above the 50-day moving average. This is like the rotation in and out of stuff. We just continue to do it. If we get below 20, we usually shoot up above 80. That didn't happen this last time. What does that mean? Well, it doesn't really mean anything, but there are times when that doesn't happen. So, but typically, anytime we poke out the bottom, we go poke out the top, and then we come down and poke out the bottom again eventually. So that's kind of the range. We're just parked in the middle. That means it's a coin flip. What's going to happen next? We might go poke out the bottom again. NDFI, same thing for NASDAQ. Although I don't see how, if you have 100 stocks, how you have 63.36%. 100 stocks, how do you get 0.36 of one? If you have 100, that should be like 63 or 64. I don't know. Somebody's cooking some math on that. Anyway, NASDAQ obviously showing a little more strength, but also that's like the watermelon seed squeeze situation. This thing is likely to pop one way or the other. It may pop down since up was the last place it had been. All right. High, don't get FOMO thinking we're going higher. We may experience a volatility event on all that news that we have coming out next week, all those economic numbers. So S&P 500 highly likely to push right on up here to 43.25-ish on ES. That's why I look at the futures. These are the ES futures. That's S&P 500 futures, because they don't leave gaps in the charts, and it has a more complete picture of the information. So NQ, maybe the highest it goes is back to the March highs, but it is also very extended. That move is very exponential looking. Times in the past when we go exponential, we tend to get a nice size retrace. Not necessarily outsized retrace, but nice size retrace. In that one, retracing about 8% right there. What would an 8% retrace right now look like? Take us back down to that blue line. Yeah, 8-9%. Point where we consolidated. Back down to 13,392. All right. Russell breaking out potentially. Huge opportunity for this to run up into the 2,000 area where we topped out back here in February. If not, breaking on up and getting above the August high and, like getting the extension there. I do believe Russell's probably on a path to go up there. It could outperform. That's IWM if you're unfamiliar. So, and NQ is QQQ if you are unfamiliar. Oil continuing to show a little strength. I did double down on added some USO yesterday on this potential measured bounce breakout. I think we could continue to see strength, and my target is up here around 84 right now on oil itself. Yeah, we got to do a little move like this. Yeah, right there, 80 to 82, 84 at the high end. So expecting oil to come right up here before we see another retrace. It does have, this is interesting that the roadmap line and the 100% extension right there at 78 do happen to be right at the same place. A little interesting to me. A little bit interesting. Doesn't mean anything necessarily, except that that's more resistance to get through. So it may pause there for 2-3 days before it can pop on up. If it's going to pop on up. Anyway, it could find resistance and turn down. Always possible. Gold looks like it's probably going to push down to the roadmap line. Bitcoin, nice rally yesterday off of touching the roadmap line. I'd like to see some continuation today, though taking a little break, doing a little potential 618 retrace or a measured bounce is very positive for higher prices. Ethereum just continuing to sit on top of the box after that little diversion into the box yesterday and the day before. We could blast out of here. Be careful. Set your alert up here around 1930. Break out over 1930. It's like a game on for Ethereum. Bitcoin breaking out over 29,000 is really where the top is right now, because we popped up there, got slammed down. So got to break out above 29,000 on Bitcoin. That will probably take us to about this 32.7, 32.8 area right up in here on the next move. DXY looks like it's going to crush down. That looks like a bearish potential start, and we may go lower low. Go hit the 90s. I've been talking about it, mid 90s. I've been talking about that for a while. That's a bearish lower high at this point. Resistance to the roadmap line, extension lower. Highly likely to do that. May find support at 99, maybe 98, and do another bounce before we can push on lower. GME, nice pop. Probably going to retrace that gap up. I mean, gap up, retrace, gap up. It just typically retraces. That's so far a lower high, and that's not bullish. MVIS, this one going crazy on that Apple thing. I don't know if they're a supplier for Apple or if people just think they're a supplier for Apple. Showing a nice big pop. That's just an exponential move off of this lowest low. Highly likely to see a large retrace off of this. Highly likely to come back to this $4 area. Highly likely. Be careful. Be careful. Tesla looks like she's gunning for that trend line. Big down trend line of the highs. Looks like it's gunning for it. Rewind, go back in time. We talked about the fact that we'd come up to the roadmap line. We'd probably retrace. We did, right to the zone. We set up a bullish setup, which puts us, that's why I drew this giant blue arrow. I actually drew all these arrows back in February, March, January? I don't know. I think probably January. I drew those arrows, said we'd likely come up and test this downtrend line. Looks like we're probably going to do it right over here somewhere around 250. We'll probably see a reaction that takes us back down to the roadmap line somewhere around 200 after touching that, and then we can go for the breakout. That's what that line, and the breakout. And that breakout potential can take us out to 304 before we see another retrace. So if Tesla's going to turn bullish. Now look, also the August highs, we topped out August, and September back here. That happens to be right up here around 310, 313, 315, right there on Tesla. While a lot of other tech is up there testing those highs from August, Tesla still has a relatively large percent, 37% higher to go to test that. Likely to meet that resistance at that downtrend line. There is no way that algorithms and other people don't see that trend line. That's the downtrend line of the highs since the top back here in 21. So be careful. If you're longing Tesla, we could see some volatility and some outsized moves there. 250 losing 20% back down to the roadmap line at 200 before we can appreciate about 50% up to that 300 area. MANU, just hanging out on the roadmap line. Nothing awesome. I pulled this off of StockTwits. PLTR, beautiful. My next big target up. We did consolidate right there at the top of that target and a little bit at the bottom of that target. Next one up is 22 for another bigger play here. That's where we consolidated right up in here, probably headed to 22. I am long synthetic out to 2025 and some shares and some other calls, and I'm long a bunch of stuff on PLTR. This was a beautiful potential setup right here for a larger move to a potential higher high eventually. Got some stuff to work through though, and probably need a retrace at some point in here. So, but 22 is the next upside move for PLTR. UNFI. Ouch. Lower low. That's why I say don't trade garbage. Unable to break above the roadmap line, set that up. Unable to do anything, set that up. This one can go all the way back to the lows at 5. PLAY. Dave and Buster's. That's just a choppy garbage mess. W Wayfair. I've never found anything I needed. Resistance up there. Just that doesn't look like something I would chase. Could pop up back up here again. That's one high, too high. Lower high slightly. May make another lower high up here in the 60s. Be careful. VRA. Looks likely to retrace that. That is a potential bullish. Oh, yeah. That's a really nice potential bullish setup here. Maybe got a little overexcited on that pop. Right into resistance. If it can turn around and clear that, you know, $7, $7.70 on the upside, potentially. SoFi. Yeah, it looks like it's on the path. Like that is a pretty bullish setup to get up to that $9 area. And finding a little resistance, getting through those prior highs. If it can push on up, probably get up to $9, probably retrace, and then get up to maybe $10. Netflix showed a nice pop pre-market. That's on the path. That's in the orange box. We're filling the gap. 500 is the target. Maybe not today, maybe not tomorrow. We'll probably get some pullbacks in between, but we're going to 500. SMCI continues to be ridiculous. Be careful chasing that one higher. This is a bubble type move. It will bubble right back down. Probably come back to 97 at some point. Maybe not today, maybe not tomorrow, maybe not next month. Highly likely to come back to 97, if not all the way back down to 36. It does sell. What they sell is computers set up to do AI research, and they sell them for a lot of money. And they put 10 plus GPUs in there for you at a cost about $15,000 each. You didn't know that NVIDIA GPUs were $15,000 each. They are. And NVIDIA just releasing a new GPU that architecture that can have 100 terabytes of working memory yesterday. So, SMCI, let's blast off, baby. And they don't just package this stuff up. They make the computers. So Marvel, whatever. Or probably after that move, that was probably the target. Oh yeah, exceeding the target. Highly likely to get a retrace. Probably back to fill the gap. While it could go higher, that's my primary expectation over going up to retest these highs right there. It's probably resistance on the upside there, about 75, 76. CRM. And probably going to eke on up to that. That's potentially the highest high it'll go before it retraces to the roadmap line. If it just retraces now, then we can change that and reset it. But highly likely to come back and retest this zone down here where we consolidated and broke out from, and haven't quite got back down there yet. Roku, nice little pop, but it's right into resistance. Got some work to do. If we can get above this high from right over here, you can set your alert off that high. Get above that, we could potentially go on a run. It'd be like a double too, almost. So, but right now, I'm not super interested. That is a potential measured bounce setup right there. Poking up through the roadmap line, exactly what I want to see. Do have resistance. If we can get above it, off of this super bearish chart, this needs to prove it to me before I would go long. we do have, this would be the primary first target area on a breakout. Then we probably get a retrace, maybe down to here, possibly back down to here before we went up for that move. MOND, just chopping. That's a big gap down. Be careful on this stuff. But the resting price is right there at 10. It's probably some sort of SPAC thing. I don't know. Base, couch base. No idea on that one. Looks like it's coming back to the roadmap line. That's been a choppy chop fest. That was an exponential move. Probably exponentially coming right back. Find support of the roadmap line, turns up, we can go higher. And the next extension might be something like 24, 26 on the upside. NAMS, biotech, dangerous, choppy mess. Campbell Soup, ouch. How low can she go? Looks like a three-wave retrace, and we're in the bounce zone. So we start to break out above 48.75-ish. Probably going to head back up to the roadmap line around 50, 52 area. Baidu. Continuing the sideways churn in this zone right here. I got nothing on that one. Sony, getting a little retrace. Potential move up. Target around 107. All right, that's kind of the list for the day, bias for the day. Expecting that little churn up, probably test that high. If not today, maybe it's gonna be a slow grind the rest of the week probably, and then volatility next week, potential big pullback. So it's kind of boring in the market right now. This is the time to strategically place your protection and be careful about it. Don't just jump in on stuff. So, all right. Thanks for coming, everybody. Make sure you subscribe. I'll go live again tomorrow and do this again. We'll look at what's moving for the day, where the potential is, and talk about how to keep planning for the pullback that is likely to happen and create volatility. Historic seasonality of June. If we look at this chart right here, pull this up really quickly, we do typically see outsized volatility in June after a big dip to a lower low in May. And this right here is probably in June, this dip right here, and then we usually go on a big volatility inducing spike. Just keep it in mind, this is historically, so far, we're following on the historic path here. This is what happened back in March. We saw a spike, we saw a fat spike. We've been seeing these moves. We're seeing this dip. Next on the map, just based on 20 years, right there. Be careful, please. S&P 500 usually sees a dip, a spike, and a dip, a bigger dip. So that's based on 20 years. This is what happens in June. Please be careful. If you want to see on NASDAQ, we typically just chop. Come up to a high, retrace, come up to a little higher high, retrace, before we go on a run into the fall. Please be careful. The account you save may be your own. Wear your safety helmet next week. All right, bye for now. Like I said, be back tomorrow. Have a great day. Stay safe out there. Come chat with us in Discord. Links in